Good day, ladies and gentlemen. Once again, this is exercise 4.7, exactly extracted as it is from the textbook, in the old textbook, and I'm still under the labor cost topic, and I would like to read first what is required so that I analyze based on the requirements, so that can I align what I'm analyzing based on what we are required. We provided with quite a lot of information with the table also available. We are required to calculate the net salary of the 3 employees for the month. So that means this net salary, or the net salary or salary payable, is for the month of December, the month of the bonus in the year 2001. We are also required to show the wage sheet in both rand and cents, and we are also further instructed to first show the calculation of the rate per week. That means we are to calculate the rate per week. It is very likely that we are given salaries for the full year, then we are to convert them to weekly salaries and determine the rate per week based on the number of hours the employees are working per week. Then after the rate per hour, then after clearly show how you would arrive at the overtime hours. So now we need to show the calculations of the overtime hours. I might just show it roughly in my explanation without having to show the calculation, but you'll see where the calculations are coming from. Then you can extract a table for yourself. Now we know that there are 3 employees which we are required to prepare the wage statement or the salary statement, which is John, Peter, and Simon. So before I read and analyze the information, I just want to write their names, which is John, Peter, and the last one is Simon. So now these are the employees that I will be dealing with in this scenario that I am provided. And I know that we start with the normal salary. Obviously it will have to be a salary, not a wage, because the wage is a weekly or daily or hourly payment. It's an instant payment, to be honest. You get paid immediately after the work is done. The wages of sin is death. Now, but we are focusing on the salary, where the payment or the reward of what you've done will take place at the end of the month, not immediately like the wages. Now I've drawn the 3 columns for the 3 employees. Then now I can analyze the information and try to align it by pasting it to where it's supposed to be. It says in December 2001, which is the month we are instructed to prepare the wage statement, which is the net salary for these 3 employees. You were employed, oh, that is very lovely. You were employed by ACA as their management accountant, and they have asked you to calculate the net salary for the 3 members of the executive committee, namely John, Peter, and Simon, as your first job. Very lovely job to do the wage statement for the executive, not just for the ordinary employees. Then you will get to know how much normally or how much roughly executive are earning, not people who are there at the operation earning small salary. The executives have to work 6 days a week, 8 hours from Monday to Friday, and 5 hours on Saturday. Let us calculate the total working hours for these employees, all 3 of them. 8 times 5 will give us 40 hours plus 5 hours on Saturday. That means normal hours, it is 45 hours. So now these are their normal hours, which is 45 hours. I just want to take this page, which is action note, so that I can just draw my normal hours here for all employees. Normal hours, it is 45 hours. That means in a week, these employees are expected to work 45 hours. And I want to highlight the fact that normal hours, or the normal salary, it is where the pension fund will be calculated from, together with the UIF and the retirement annuity fund. Now, it says salaries. Now we are done with the normal hours, which is Monday to Friday, from 8 hours, and Saturday only 5 hours. So now if these three employees, or one of them, they work these hours, they don't get overtime. But the minute they work more than 8 hours between Monday to Friday, and more than 5 hours on Saturday, then now these hours get to be classified as overtime that need to be paid. Then it says, remember, we still don't know the payment rate, and also based on the public holiday and overtime, how are they being paid. But we are looking forward to see that if this executive did work overtime during the month of December 2001. Salaries are 450,000 rands, 402,000 rands, and 360,000 rands per annum for John, Peter, and Simon respectively. So we can say that these are really serious salaries. Let us just do a roughly monthly payment or monthly salaries. 450,000 rands divided by 12 will give us monthly salary 37,500. So which we can record so far as our normal. Why? Because executives, they get paid a fixed salary. So that will be 37,500. The second one was 402,000 rands. That must be divided by 12 in order for us to get to 33,500 of the salary for the month of December, and 360,000 rands that need to be divided by 12 in order for us to get to 30,000 rands, which is the salary for Simon for the month of December. So now these are the normal salaries that are being paid to these three executives. Now let us read further as we analyze and pasting the information where it's supposed to be recorded. Then now it says they receive travel allowance of 35% and entertainment allowance of 30% of their normal salary per annum. So now that will be the normal salary per annum, but we are doing the wage statement for the month of December. So now we have to base this 35% and 30% of the entertainment allowance and the travel allowance to their monthly salaries. So let us start with the travel allowance. If you want, you can say allowances as a heading, but due to limited space, I'll just say travel allowance. Travel allowance. And our travel allowance is clearly stated to be 35%. They receive travel allowance of 35%. Remember, this is classified as a fringe benefit when you do taxation 1. A fringe benefit is something that you don't pay for, but you're supposed to pay for if the company did not give you the benefit. So now that means, in other words, this executive, they get to travel at the expense of the company, of which if the company did not give them the traveling allowance, they were going to pay for that. So they are enjoying the benefit that they should be paying for it, but they don't pay for it because the company is paying for that benefit. So now it's called a fringe benefit, but it's a travel allowance to be specific now. So now hence this get to be added as their gross income, is because they're supposed to pay for it, but they don't pay for it because the company pays it on their behalf, which is 35%. So travel allowance will be 35% times by 35% of their salaries. We get to have a travel allowance of 10,500 for Simon, 10.5, 33,500 times by 0.35, which is 35%. We have 11,725 rands. Then 37.5 times by 0.35 will give us travel allowance of 13,125. So they can travel at a cost of 13,125, John, at the expense of the company. So they enjoy this benefit, which they don't pay for it, but they should be paying for it. Remember, they don't travel for business, they travel for their own private purpose or private use. Then after, there is entertainment allowance. Entertainment allowance, it is 30% of their salaries, which is 37,500 times by 0.3. We get 11,250. 11,250. 33,500 times by 0.3, which is 30%, it is 10,050 rand. 10,050 rands. 10,050 rand. Then the last one, who earns 30,000 normal salary per month, 30% of that will be 9,000 rands. So now this is the fringe benefit once again, because this executive, they enjoy entertainment that is worth these amounts, yet they don't pay for it. But if the company did not give them this allowance, they were going to pay for this. So in other words, it is saving on their side, but the company will have to acknowledge the fact that we are indirectly giving you money to enjoy yourselves, not necessary for business, but for private use or for private purpose. So the entertainment and travel allowance, which is under our gross income, is taken into account. We are further told that they receive, who are they? We are referring to the three directors. The three directors all receive the 13th check, which is 100% of their salary for December, as their Christmas bonus. Let us stop here. So they receive a 13th check, which is 100% of their salary. So now, in other words, we need now to acknowledge the bonus, Christmas bonus. We need to acknowledge the Christmas bonus, which is 100% of their salary. Christmas bonus. This one will receive 37,500, and this one will receive 33,500, and the last one will receive 30,000 rands. Remember, the salary is 100%, the bonus is 100% of their normal salary, and the bonus is 100% of their normal salary, and the bonus is 100% of their normal salary. So we have taken into account now the 13th check. So they get well paid, honestly, in this month of December. It further say that, and a 14th check, which is 100% of their salary, although they don't specify. When they say 100%, it is 100% of their salary, of their normal salary, to be honest, or to be specific, on their birthdays. Oh, that means on their birthday, they double their normal salary. John's birthday was on the 8th of May. Remember, we are doing the wage statement for the month of December. So that means John has already received his in the month of May. Peter is born on the 16th of June, and we are not doing June, we are doing the month of December. So Peter already in the current year have received his birthday bonus. Although Simon is awaiting in the good month of December, where there's a bonus, is also getting the same salary, which is the 14th check. And that 14th check being equal to the birthday bonus, 30,000 for him. So he is really rejoicing in December. Birthday bonus. Nothing for this one, nothing for this one. 30,000 for Simon. He is really enjoying a lump sum of money in December. This is his month. So we have accounted for that. Then now we read further in the last paragraph. The last paragraph says, during the week of 22, 23, 24, 25, 26, and 27, which is 1, 2, 3, 4, 5, 6 days, 27 of December, meaning from 22 to 27 of December, these directors, they worked 10 hours. Remember, how many hours are they supposed to work as normal hours? Remember, their normal hours Monday to Friday is 8 hours a day, Monday to Friday. On Saturday, only 5 hours. But we can say that they worked how many hours? 10 hours in all these days. Now we need to know, was 22 on Monday or it was in the middle of the week? Let us check the next part. We are told that they worked 10 hours every day because they had to complete a project by 30th of December 2001. Okay, these executive directors, they are really dedicated. During December, they have no time to enjoy but to work hard. Commitment. That's what we can conclude and say in one word. 22 of December is on Monday, so they making this very clear that the 22nd of December is on Monday. That means this is Monday, so I want to calculate OT. Remember, OT is overtime. Here they work 2 hours. Why I'm saying 2 hours? Because normal hours, it is only 8 hours Monday to Friday, so there was extra 2 hours. Why? Because they work 10 hours in all these 6 days. So there was extra 2 hours, there was extra 2 hours, there was extra 2 hours. Remember, 25th and 26th of December are public holidays. So now if these 2 days are public holidays, then that means all this will be overtime in red. I want to highlight that, because this overtime, which is during the week when it's not a public holiday or a Sunday, employees get paid different rate, which is normally 1.5 to ordinary employees, but we don't know with the executives. So now this is the overtime of 10 hours. This is 10, this is 10. This OT, which is overtime, must be denoted differently, 10 hours, because employees will be paid for all these 10 hours on public holiday. So on the 27th, which is on Saturday, they worked 10 hours. We know that on Saturday, these employees are supposed to work 5 hours. That means the 5 hours on Saturday will be overtime. Another 5 hours on Saturday will be only normal hours. Remember, we're only calculating overtime. So we have 2 plus 2 plus 2, which is during the day Monday to Friday. Normal days, they work a total of 6 hours, normal hours. Then on public holiday and Sundays, which in this case is public holiday, they worked 10 hours, 10 on Friday, on Thursday, and 10 on Friday, which is 25 and 26. On Saturday, they worked again another 10 hours, of which the overtime then is only 5 hours, because they are only allowed to work 5 hours on Saturday. So the minute it is 10 hours, meaning another 5 hours, it is an overtime. So now I want to highlight again the fact that the 6 hours is during weekdays, and the 10 hours, it is because of double pay, which is normal double pay or overtime on public holidays, and the 5 hours is on Saturday. So now I will be dealing with these hours now as we progress. We don't know yet how these employees are being paid in terms of their weekly rate and their hourly rate. We still need to calculate that. Now let us proceed further. It says the executive did work on the 25th and 26th of December. They did work. They highlighting that on the 25th and 26th, executive did work, even though these 2 days were public holidays. So now, meaning the entire 10 hours is overtime, because public holiday, they were not supposed to be there. So public holiday is not one of their normal working hours. So now that is why I highlighted to be full 10 hours overtime on public holiday. This one, 5 hours, is only on Saturday, not a public holiday. Then now let us listen to how the overtime is remunerated. Let us see how the overtime is remunerated. Overtime is remunerated and 2.5 times the normal rate on weekdays, meaning we're referring to Monday to Friday. Monday to Friday, which we know that these employees worked a total of 6 hours, 2 on Monday, 2 on Tuesday, 2 on Wednesday, extra hours above their normal 8 hours. So meaning we are talking about that 6 hours there, 4 times, and it is 4 times the normal rate on Sundays and public holiday. And the executive did work on 25 and 26, and they work a total of 20 hours over the 2 days. So now this 4 times the normal rate will be calculated from that total of 20 hours, which is 10 hours on the 25 and 10 hours on the 26th. So now 20 hours were worked during the public holiday. So now that will be 4 times the normal rate. That will be the 20 hours, which will be 4 times the normal rate. But the one that is 2.5 hours, we can clearly see the one which is 2.5, it is only 6 hours, 2 extra and above the normal hours on Monday, 2 extra and above the normal hours on Tuesday, 2 extra hours above the normal, over and above the normal hours on Wednesday, which makes a total of 6 hours between Monday to Friday or during weekdays. Then after we are provided with the deductions. Before I go with the deductions, we need the hourly rate. We need the hourly rate. Then after again the weekly rate, because we were instructed, I want to make this very clear, we were instructed to show the wage sheet or in rand and in cents. First show the calculation of the rate per week and then the rate per hour. Clearly show how you arrive at the overtime hours. So we need to show the calculation, and we have already calculated that the overtime hours, it is 6 hours during weekdays, and it is 10 hours on it is 20 hours for the public holidays, and another one it is 5 hours. So now we are very clear with that. And please also highlight the fact that I almost forgot that one, the 2.5 times is also referring to the 5 hours, because the 5 hours is not paid a separate rate, it is just a normal overtime. Yeah, it's just normal overtime, because that is an overtime. Employees, when they work overtime except public holiday, they get paid 2.5 of the normal rate. It's different from other companies. I know it's normally like this in almost in all the companies. Overtime Monday to Saturday is paid the same rate, and also on Sunday or public holiday it would normally double, but in this case it is 4 times. So now that means our total overtime hours will be 6 plus 5. That means we'll have a total of 11 hours, because Monday to Saturday overtime is treated the same, but Saturday overtime hours is treated separately than Monday to Friday overtime hours. Then after we proceed, we need now to know how many weeks do we have in this year. There at the bottom note, there are 365 days in a year, there are 52 weeks in this year, and there are 12 months in this year. So we have used the month already. Now we need to use the weeks so that we get to the salary per week. And you know that these executives work 45 hours a week, so that we can drill down to what we call the rate per hour. So now let me show those workings and see if it won't fit here. Then now we're calculating the weekly wage. We are calculating the weekly wage and the rate per hour. Rate per hour. Rate per hour and rate per week. But I'll start with the rate per week, then after I do the rate per hour. We have 3 employees, which is John, Peter, and Simon. We have John, I'm thinking how to put this vertical or horizontal, John, Peter, and Simon. John, Peter, and Simon. Now, we need to do the calculation and say John earns an annual salary of 450,000 rands, divide by 52 weeks in a year, so that we get to the salary per week. Take note, I'm not saying divide by 12. Then after divide by 4, we go straight to 52 weeks so that we know how much the salary per week. So now after I'm done with that, then I can immediately record the salary per week, and the salary per week will be 8,653 rand 85 cents. We divide this by 45 hours a week, then we get the rate per hour. Divide by 45, we get the rate per hour. Hourly rate, and the hourly rate, it is 192 rand 31 cents, 192 rand 31 cents, or 30 just 3.308. Then we come to the second executive, who earns 402,000 for the full year. Divide by 52. This gives us the salary per week, because there are 52 weeks in a year. 7,730.769, which is only 2.77. We divide this by 45 hours in a week. 45 hours in a week, because the wage is for the week. Then we divide by 45 hours in a week. This will give us 171 rand 795. This is the rate per hour, hourly rate or rate per hour. The last executive earns 360,000 for the full year. Divide by 52 weeks in a year, we get the wage per week. The wage per week, it is 6,923 rand 8 cents 08. Divide this by 45, divide this by 45, divide this by 45 hours, divide this by 45, we get 253 rand 80 846. So now these are the rates that we are looking for, the rates per hour. This will be our main menu and our main focus. Now why do we need this? Is because we have overtime. So now for us to be able to calculate our overtime, we need to know the rates of these employees per hour. Now let me just try to draft them somewhere down, where we have 192.308, 192.308, 192.308. Then the second one, it is 171,795, 171,795, 171.795. The last one is 153,846, 153,846, 153,846. I'm just writing them down there so that I can see them when I'm doing my calculations. We have clarified our calculation, and we have seen that we needed a total of 11 hours, of which our overtime hours was 6 hours plus 5 hours on Saturday. So we have a total of 11 hours. Please write this as your workings, because it was instructed for us to do so. Then it will be 192.308 times by 11. The overtime for this employee becomes 2,115 rands. 2,115 rands, which is the overtime that is paid by this employee for the normal working hours. Weekdays, let me just verify that we have 190. Weekdays we have 192 rand 308 times this by weekdays. We said we have a total of 11 hours. Just want to verify that calculation, if we had 11 hours really as our weekday hours. Yes, okay, yeah, that is correct. We had 11 hours, but now we need to check how much are our employees being paid for overtime. We were told that our employees are being paid 2.5 than the normal rate. So now to this figure we say times by 2.5. Then this will give us our overtime, because overtime is not paid 192 rand 308, but is 2.5 than that, which gave us 5,288 rand 47 cents. And again the second one we say 171.795 times by 2.5 times by 11, we get a total of 4,724 4,724.36. Then after we have 153.846 times 2.5 times by 11 hours, and that is 4,230.76. Then after we need to go to public holiday. We need to go to public holiday. Our public holiday, we know that our employees worked 20 hours. Then it's 192.308 times by 4 times by 20 hours is giving us 15,384 rands 64 cents. Remember, our public holiday were 20 hours and they are paid 4 times the normal rate on Sunday and public holiday. So that's where that 4 is coming from. Then after we have 171.795 times 4 times by 20 hours, 10 hours on the 25th and 10 hours on the 26th, 13,743.60. And the last one, the rate per hour is 153.846 times then again we say times 4 times by 20 hours, we get 12,307 rand 68 cents. 68 cents. So 12,307.68 cents. So now this will be our normal rate. Sorry, our public holiday 171.795 times by 4 times by 20. That is 60 cents. Then now we have taken into account all the figures that belong to our gross wage. Now that we have all of them, we can do the total, and I won't be doing the calculation individually. I'll just copy this one figure. Please don't forget to erase that, it does not belong there. Now we will have our gross wage for each of these employees, which is a gross salary, not gross wage, gross salary. Then after that, we know their first two deduction is pension fund and retirement annuity fund. Now our gross salary, it is 120,000 and 48 rand 8 cents. And here we have 107,242 rand 95 cents, and it will be 96 cents here because of the rounding off that I know of. But don't worry about the fact that it's 96. It doesn't matter either 95 or 96. There is normally no penalty for one rounding off issue. We have 126,000, but I'll keep it to 95 for the sake of continuity. 126,036 or 136,038 rand 46 cents. So now these then become our gross salaries. Gross salaries. First deduction, we know that it is pension fund, and we know the second deduction, it is retirement annuity fund. If there is retirement annuity, we know that pension fund and the pension fund is calculated from the normal salary. So now if it's calculated from the normal salary, we need to see where is this pension fund. Pension fund 7.5, 7.5 and 7.5. We know that our normal salary for the month for these employees, it is 37.5 for the first one. 7.5 divided by 100 times by 37.5. Then this gives us a total of 2,810.19, 810.12 rand 50 cents. 0.075 times by 33,500. It is 2,512 rand 50 cents. Then after we continue with the pension fund, which is out of 30,000. Remember, there is our calculation. We are focusing on the normal salary. 0.075 times by 30,000. We want to know only for the month 2,250. Then let us look if there is a retirement annuity. Retirement annuity, there we do have retirement annuity fund 500 per week. How many weeks do we have in a month? There are 4 weeks in a month, so this will be 2,000. And we are provided with 1.5 already for the second employee by the name Peter, 1.5 per month. Remember, this is per week, so 500 times by 4 will give us 2,000. This is already per month. There is no need for a change for that. It is 1,500 because we are doing this for a month. The next employee, they said, is 15,000 per annum. We divide by 12 because we are looking for the retirement for a month. So now please be mindful of that. We divide here by 12. We don't divide by 52 and multiply by 4. We divide by 12 because we are looking for this expense for the month. So now we have the UIF, which is given to us. UIF, it is 10,000. 320, 10,320, and 10,000, 9,007, or 10,020 and 9,720, which are per annum UIF. What does that mean? That means, first of all, we need to deduct these two expenses. When we deduct them, what do we get to? We get to taxable income. We get to what we call taxable income. After taxable income, then we can have what is called deductions. After taxable income, we get to what we call deductions. Then our taxable income, it is 115,235.58 cents. and here we have 103,000 230 45 cents, and the last one we have 122,538 rand 46 cents. So now that we have our taxable income, then we start with the first deduction after, which is pay as you earn. Pay as you earn is calculated from the taxable income. They will give us the percentage. Mostly you'll be given a percentage. There will be few times where they can give you taxable income amount. Now our taxable income is 33%, 27%, and 25%. 33, 27, and 25. So what do? We say 115,000 rands, 235.58 times by 0.33. We get 38,000 at the deduction of pay as you earn. 38,027 rand 74 cents. Second one is 27%, 0.27 times by 103 rand 230 rand 45 cents. Then this will be 27,872 rand 22 cents. Then the last one will be 122,538 rand 46 cents times by 0.25 cents, where we have 30,000 634 rand 62 cents. These are just taxes that are being paid by this executive, and the taxes that they are paying, they are even way above than the salaries of so many citizens in the country. Then we go to UIF, we go to medical aid. I think there must be a medical aid, and let us look at the other deductions. Normally those two are very, very popular. We do have UIF, yes, 10,320 per annum. We need it per month. 10,320 divided by 12 is 860 rands. Lousy 860. Another one was 10,020 divided by 12, 10,020. 10,020 divided by 12, it is 835 rands. It is 835 rands. And the last one, it is 9,720. Just to verify, I think it was 9,720. Yes, divide by 12, we get to 810 of the UIF, unemployment insurance funds. 810. Then medical aid, medical aid, medical aid. How are we calculating medical aid? We are told that medical aid, 40% paid by the employer, 60% paid by the employee. We are focusing on what the employee is paying, which is the 60%. That is our focus. Our focus is on the 60%. And it is very consistent throughout all these executives. So now out of this 3,800, which is per month, you can see per month, and we are doing the wage statement per month here. 3.6 or 3.8, and that is per month times by 60. So all these employees' medical aid is 2,280. 2,280. 2,280. 2,280. So we are done with the deductions. Isn't there a last deduction to capture? Done, done, done. The last one, housing bond. This is not housing allowance. Take note, it's a bond. This is what the employees are paying to their bond, meaning the house that they bought. 3,000 is deducted before the salary is paid to the employee, and 3,000 is paid to the bond company or the bond company, which is the bank, before the employee get his amount. 3,000 and 3,000, that is Peter and Simon. House bond, that is the bond of the house. This one, maybe his bond is paid off 3,000, and this one it is also 3,000 rands. Then we need to calculate the total of all these deductions, and these deductions will amount to 41,000, which is negative 41,167 rand 74 cents. Second one, deductions will amount to 33,987 .22, and the last one will be 36,724 rand 62 cents. Then our taxable income minus deduction, taxable income minus deduction, and taxable income minus deduction will give us the net salary. Will give us the net salary. I will not have enough space. I think there will be net salary for all this. Please draw a line here, and draw a line, and draw a line, and draw a line, and throughout, in between. Please do that as you start. Then now we have our net salary, which is 74,067.84. The second one is 69,243.23. The last one is 85,813 rand 85 cents. So now this will be their net wage, sorry, net salary for the month. I always make a mistake and say wage, but it is a salary. And I want to highlight the fact that there is a portion only in one expense, which was contributed by the employer, which is the 40% by the employer. Now, if let us say in this scenario, but we also know that when you come to UIF, the employer also does contribute the same percentage, but it's not specified in this case. But we know that the same portion that the employer contribute here, the employee contribute, the employer also contribute the same 1%. Then the 40%, which is contributed by the employer, plus the 1% contributed by the employer, plus the same portion that is contributed by the employer, because the employer normally contributes the same amount of the pension fund as the employee. So now this by the employer, plus the 40% by the employer, plus the 1% by the employer in each of these employees. Then we take those figures, we add them. I want to highlight that we add them to gross income. That will give us cost to the company. Gross income plus the contributions that are made by the employer will give us total cost to the company. Then total cost to the company divide by total hours will give us what we call the recovery rate, and it is there in your handout or in your textbook, so that when I do the next question where we deal with the recovery and the total cost of the company, please be aware that it is the gross wage or the gross salary plus the contributions that are made by the employer, meaning in terms of the pension fund, in terms of the UIF, and also in terms of the medical aid, if there's a contribution made by the employer to the medical or toward the medical aid. So all those plus the gross salary or gross wage will give a total cost to the company. Divide by the total hours will give us the recovery rate. Thank you guys very much.